Inflation surges 9.1% in June, the fastest annual pace since November of 1981. The insolvencies and liquidation risk in crypto continues to compound as the economy experiences a further contraction. And so to understand where we are and where we're going to be going, you have to understand the cause effect relationship. And so that's what we're going to be getting into today. And so if this is your first time watching, I'm Tim Ford. Welcome to the channel. And if you enjoy financial media, if you like Bitcoin, trade tips and more, smash up the like button, subscribe to the channel. Don't forget to hit that notification bell so then you know when these videos drop. Let's get right into it. Inflation surges to a new 40-year high. And so to understand what's happening here, we have to go back just a little bit. In 2020, we all know we had one of the most horrific global health crises that put the entire country on standstill. In response to the global health crisis, the Fed quickly printed tons of money through fiscal policy and stimulus to prop up the market. So individuals and families was receiving checks, right? Interest rates went down to zero. Lending was plentiful. Right now we're looking at the federal funds rate, which is used to control the supply of available funds and inflation, right? And so raising the rate makes it more expensive to borrow. And right, and when they lower the supply of available money, increases the short-term interest rates, it helps keep the inflation in check. And so you see where the rate went literally near zero during that time. It was right around November at the November Fed meeting when the Fed was concerned. They were saying, hey, things are getting out of control. We need to consider increasing rates so that we can slow inflation down. Looking at this weekly chart of Bitcoin, the response of the COVID-19 allowed Bitcoin to go on this parabolic move, right? And then literally right here, November 8th, which was right around the same time when the Fed started to signal that rates were going to increase, this is exactly where Bitcoin peaked. And from this peak, which was November 8th, the price just literally started to fall down. Again, it was right around November when the Fed started to signal that things were really getting bad. In March here is when the Federal Reserve approved its first interest rate hike, something that we have not seen again in 3 years. And even after, things were not slowing down, so they had to get a little bit more aggressive. So this is when they started to begin what is called quantitative tightening, which is the opposite of quantitative easing. So quantitative easing prop up the market, but the reverse happens whenever quantitative tightening occurs. And so here we're looking at, again, the federal fund rate, and you can see where that spike came right at March of 2022. As monetary policies start to tighten, right, lenders, banks, and everyone else start to pull back on issuing money to consumers. We started to notice that things were really getting bad when we had the crash with Terra Luna. So I'm not going to get into that. If you want to know more about that, I've actually made a video specifically talking about this whole situation, so feel free to go check that video out. We have Celsius, which is also a lending company. You can give them your Bitcoin, they'll give you a loan, or you can hold your Bitcoin in their exchange to get a high interest. So to prevent them from completely being destroyed, they had to put withdrawals on hold. And then also we have Three Arrows Capital, also blew up, right? It says how Three Arrows Capital blew up and set off a crypto contagion. So this was another hedge fund within crypto that went bust, right? Because monetary policies start to tighten. The demand just completely goes down. That's when all of the crashes and things start to happen. In addition to Three Arrow Capital, BlockFi and its contagion and its fear just continued to grow. And then more recently, we had an exchange, CoinFlex, had to stop withdrawals. Clients and people were losing their confidence. They were seeing the trend that everything was actually going down the hill. To understand what is happening, again, you had to take it back, right? We experienced one of the worst global health crises in my lifetime, and maybe yours as well. And again, in response to that, the government had to stimulate the economy, but because they stimulated it way too much, it caused for inflation to get out of control. Understand something, things are going to probably get worse before they actually get better. In high inflation environments, risky assets like Bitcoin, crypto, stocks are the most vulnerable. And so we will most likely see more selling and de-risking in this particular environment. The beauty of it is that the cost of these riskier assets are going lower. And so if you are a long-term investor, this is good for you because you're going to be able to come in and scoop up some cheap deals, right? And you're going to hold on to these coins and these stocks for the long term. And so that's all I have for you today. Like, comment, subscribe. I'm Tim Ford. To the next time. Out.